Good afternoon, Form 2s. This is a quick video to just go through the memo of example 2 in your textbooks. Example 2 says, check the transactions that have taken place for Grand Bazaars for January 2006 and enter the transactions in the debtors journal below. The markup on stock is 100% and you must complete the journal and then the ledger. Okay, so let's first just quickly go and look at the journal. The journal has a heading that says Debtors Journal of Grand Bazaars for January 2006, and because January is the first month of the year, this will be DJ number 1. Then let's go and look at the transactions one by one. The first transaction says, on the 1st, Greens Inc., debtor 1, buys vegetables on credit. So the word on credit must indicate that it would affect the debtors journal because they are buying from us, but they are not paying us immediately. 2,600 Rand, and we issue invoice number 45. So if you go and enter this into your debtors journal, that's at the bottom of your page, you would say that the invoice number is number 45. It's on the 1st. The debtor that's paying us is Greens Inc. Greens Inc. is debtor number 1, so you have to write D1 in the folio column. The amount we received from them is 2,600 Rand. And because the markup is 100%, if you say 2,600 Rand multiplied by 100 over 100 plus markup, you will get a cost price of 1,300 Rand. If you don't know how to calculate your cost price, then you have to go back to your Form 1 work. Okay, then the next transaction took place on the 3rd of January 2006. It said that we sold 20 cases of cool drink to Bottle World, debtor number 2. On account, so the words on account is another indication that this means that the person or the customer is buying from us, but they are not paying us immediately. The reason why I'm saying these things to you is because in the future, we will give you transactions that would affect the CRJ and the DJ all together. And then you would have to be able to identify when are they paying us and it goes to CRJ, and when are they buying on account and it goes to DJ. Okay, totaling 600 Rand. So if we complete the debtors journal for this transaction, we will say it's invoice number 46. They didn't tell us what the invoice number is, but you know that it must follow on the previous invoice number. It took place on the 3rd. We received, the customer in this case was Bottle World, who is debtor number 2. They paid us 600 Rand in total, and with a markup of 100%, the cost price will be 300 Rand if you do your cost price calculation. The next transaction on the 9th said S. Sumi and Company, debtor number 3, orders goods on credit. Once again, on credit means that they are one of our debtors for 1,700 Rand. So if you take this to the debtors journal, it will be the next invoice number in line. So it will be invoice number 47. On the 9th, it's S. Sumi and Company. It's very important that you write the debtor's name exactly as it's given to you. So if there's a full stop, make a full stop. If it's in capital letters, keep it in capital letters. This will be debtor number 3, D3. The total selling price was 1,700 Rand, and the cost price, if you do your cost price calculation with a markup of 100%, is 850 Rand. Then let's go back to the transactions. On the 15th, we sold 50 kilograms of meat to Mr. Meaty, debtor number 4. On account, A/she stands for account. So once again, they're not paying immediately. They are one of our debtors at 32 Rand per kilogram. So you would have to go and calculate your total selling price by saying 50 kilograms multiplied by 32 Rand per kilogram. Okay, so if we record this in the DJ, then the document will be invoice number 48. The date was actually the 15th. It was Mr. Meaty, who is debtor number 4. The total, if you say 32 Rand per kilogram multiplied by 50 kilograms, gives you 1,600 Rand. Cost price of that at a markup of 100% is 800 Rand. And then the last transaction here on the 23rd said we issued an invoice. So that's another way that you would know that this will go to the debtors journal, because if we give an invoice to someone, it means that they have bought from us, they're not paying yet, they're buying on account. Okay, so it must go to the debtors journal because they are debtors. If we receive invoices, it's a different story. It would affect the creditors journal, which we will deal with hopefully when you are back at school. Okay, so it says for milk and cheese purchased on account. So the words on account also indicates that this is for a debtor. For 2,500 Rand to the Milky Bar, who is debtor number 5. So if you go to your DJ, you will see, let's do it one by one. It's invoice number 49. It's on the 23rd to the Milky Bar, debtor number 5. It was 2,500 Rand selling price in total, and you had to calculate the cost price as 1,250. And then right at the end, please just total your columns. The sales, total sales was 9,000 and the total cost of sales 4,500. Something that I just quickly want to touch on is that once again in this example, all of the debtor numbers follow on each other, but in reality this will not be the case. And if you get a test, this will also not be the case. What I mean by that is Greens Inc. is actually our debtor number 1. So let's say if Greens Inc. bought something later in the month from us, then you will write debtor number 1 again. So it can happen that the folio says D1, D2, D1, D4, D1, D whatever, because the number is actually associated with the debtor. So please do not think that this will always just go from 1 till 5 or 1 till 3 or whatever. Okay, now we've got to post this, and we've dealt with the posting before in the example video that was released yesterday, and it's actually straightforward. Every column has to go to 2 accounts. So the sales column has a debit and a credit, and the cost of sales column has a debit and a credit. Now before we start with that, I just quickly want you to go to your general ledger, and I want you to say that it's the general ledger of Grand Bazaars for January 2006. And I want you to go and classify your accounts. So debtors control is an asset that increases on the debit side, decreases on the credit side. Trading inventory is also an asset that increases on the debit side, decreases on the credit side. In the nominal section, you've got sales, which is owner's equity income. It increases on the credit side, decrease on the debit side, and cost of sales, which is owner's equity expense, that increases on the debit side, decreases on the credit side. How do I know on which side the plus goes? It's according to dead and click. Okay. Then the sales column, this 9,000 Rand from the sales column, goes to 2 places. It goes to the debit side of debtors control. So you will have to say January 2006. January has 31 days. Remember, a column is posted at the end of the month. The contra account is sales because it will go to the credit side of sales. Okay, in the DJ, and you will write 9,000 Rand. And then in sales, I hope we can get it so that you can see both of them. On the credit side, yes, okay, so it says January 2006, but now you will see on the credit side, still on the last day of the month, you will write debtors control in the DJ 9,000. So you can actually see that these 2 values go together. This is the debit leg of this column, goes to debtors control on the debit side, and in debtors control you write sales, because in sales on the credit side you will write debtors control, so they actually refer to each other. Then the cost of sales amount, which was 4,500, also has to go to a debit side and a credit side. How do you know this? It's actually simple because we've taught this to you in Form 1 already using the CRJ. Cost of sales always goes to the debit side of cost of sales and the credit side of trading inventory. Okay, so trading inventory is an asset that is credited. So you'll say January 2006, the 31st. You will write cost of sales because the same amount will go to cost of sales on the debit side. In the DJ, because we're posting from the debtors journal, 4,500 Rand. Now, I just want to stand still here because I got some emails last week. Why do we credit cost of sale, trading inventory with cost of sales? The reason why is, if you think about it, our trading inventory decreases the moment when we sell products. Okay, so even though the people are not paying us, they're buying on credit, the fact of the matter is that we are selling products to them. And actually the cost of this sale is that the customer walks out of our store with a product. In other words, after this sale or after these 5 transactions that we recorded in the DJ, we've got 4,500 Rand less worth of products in our store. Okay, so that's why it goes to the credit side. And then in cost of sales, the value must go to the debit side. So you'll write 2006 January the 31st trading inventory. Why? Because it refers to the fact that this value is also on the opposite side inside the trading inventory account there, DJ and the amount. So posting is straightforward. The sales column goes to the debit side of debtors control, credit side of sales. And in debtors control, you write sales. In sales, you write debtors control. And the cost of sales column goes to the debit side of cost of sales and the credit side of trading inventory. Once again, in cost of sales, you write trading inventory, and in trading inventory, you'll write cost of sales. Because there are columns with totals, you only post the totals and you post it on the last calendar day of the month. Please not on the last transaction day, so don't post it on the 23rd. Post it on the 31st because January has 31 days. Okay, I hope you have discovered so far that the debtors journal is very easy and the posting thereof is also not that difficult.